Good afternoon, tradeologists. I think it would be helpful to kind of go over some of the trades that we do that form the portfolio that we're trying to build here. In the videos and the modules, I talk a lot about some different types of trades that we use to build our portfolio and then manage those by the numbers. And those trades are iron condor, calendar, double calendar, vertical spreads, and we haven't talked about double diagonals, but we have talked about the iron condor, the calendar, the double calendar, and vertical spreads. So it might be helpful to do this video just to show you exactly what those positions are, what kind of trades those are, and how they make money, and why we use them. So that's what I'm going to try to do today, is just kind of go over each one of those individual trades and just kind of give you a sense of how those trades are put on and why we do those. So let's go to our trade tab for a second in Thinkorswim. Now I use the Thinkorswim platform, and this is pretty much the way you're going to see the Thinkorswim platform when you open it up for the first time. But if you don't, you can always go to this Setup tab up in the top right-hand corner. Just click Setup. You can have it display all of your accounts, just some of your accounts, which default account you want it to go to. I have 2 accounts on here. The position main layout, you really want to see the delta, the gamma, the theta, and the vega. You can also select net share, strike price, net change, and percent change, and I'll show you what that looks like if you say OK. It changes these, and we no longer have our Greeks here. Instead, we have net share, strike price, net change, percent change, etc. I don't like that setup, because what we do is we manage by the numbers, and the numbers are the delta, the gamma, the theta, and the vega. So that's how I have that open. Also, we want to see the profit and loss open in the day. You can go open year to date. You can go date, year to date, date open, percentages, and so forth. But I like the open in the day. You can also set the margin requirement or the buying effect of the positions that you have on. So in other words, how much it reduces your buying effect or how much it increases your buying effect, etc. I like to see the margin, because I calculate my returns based on the return on margin. Group positions by the instrument, or you could do it by the trade time that you did it. You can also select whether or not you want to mark the ITM, which is in the money positions, 2 weeks before expiration, a week before expiration, or 4 weeks before expiration. I just selected as a default 2 weeks before expiration. Lines in the position table, all I really don't play around. Volatility strategy implied, I want the individual implied volatility. You can also select volatility smile approximation or fixed volatility per expiration date. But I like the implied volatility on the individual options, so I just selected that. My default stock order quantity is 500. You can select whatever instrument, but you can always change that. You select 500 to begin with, and then you can increase that as you go. The stock order quantity increment is 100, so if you toggle up, let's see, if you select a stock that you want to buy, it automatically puts 500 shares in as your initial buy into the trade order tab. And then if you toggle up, it'll go up by 100 shares at a time. The default futures, I don't do anything with futures yet. I don't really care for futures that much, to be honest with you. The default option order quantity is 1, and that allows me to collect, either put in there 1, 2, or 3, or 5, or 10, or whatever, because then what I do is I just toggle the number that I want. Some other things here. You want to show the order confirmation tab. I think you want to show that. You don't want to just submit orders automatically. You want to make sure that that's selected as yes. Then you clear the order after the send. After you send it, the order is cleared from the tab, but it's still in the order queue, so you can still see it. I want real time, no delay on the quote speed. And some of these other things, the hints on the mouse, yeah, you can use those in your nickname. So you just click OK on that, and it sets everything up for you. And that's the way I have my Thinkorswim platform set up. And I think it's the easiest one for me to use because, you know, when I go into a trade, let's say we go from the monitor tab over to the trade tab when we want to place orders. So let's say I wanted to place an order in LMT. I just put in LMT and then I hit enter. And what it'll do is it'll bring down all of the options available for LMT at any given time. So right now the June options are available, the July. Now what they do is they do the Junes and they do the year that they are in, because you have some options that are in January of 2009, and you have some that expire January 2010. Those are the leap options, really long-term options. And then if you just click these little arrows, you can open up and see the available number of strikes that are available for that option. And you can set the number of strikes that are open by this little box over in the right-hand corner here. You know, if you only want 10 open, or you only want like the ones right around the money open, you can open just 2 of those. But I like to open up as many as possible so I can see all of the available options. And if you want to close that up, you can just right-click on the little blue arrow, and then open up another one. If I wanted to see September's options, I can open that up and take a look. So specifically now, let's take a look at, let's go to an index like IWM, which is one of my favorite index options to use. I currently have a position on the IWM now, which is way up here, and but that's because, I mean, usually I do spread positions, and when we talk about doing an iron condor, a calendar, a double calendar, or a vertical spread, those are all spread positions. And a spread position is simply the sale of one option and the purchase of another option. Normally, the sale of the option is there, and then the purchase of another option is to protect the sale of that option. Most brokerage firms, unless you have a great deal of equity in your account, or you have professional experience, do not allow you to sell options what they call naked. And that means that you're selling an option without having a corresponding option that you've purchased in order to protect the sale of that short option. So they don't allow you to do that unless you're a professional trader or you have a large equity in your account. The spreads are basically, here I'll give you an example. Now remember, if you're selling an option, you're going to be selling an option at the bid price. Let's just take these calls for a second on the IWM. When you purchase a call, you're going to buy it at the ask price. If you're selling an option, you're going to sell it at the bid price. So if we're doing a spread, let's say we want to do a very simple, what was the first, let me take the most basic and simple spread order that you can possibly take. And really, this particular spread, called a vertical spread, is probably the basis of almost every single option trade that you'll ever make, because there